Mahagathbandhan says Bihar doesn't need lantern and allies, pays tribute to Karpuri Thakur, accuses Mahagathbandhan of stealing Bharat Ratna Karpuri Thakur's legacy.
चोरी की इनकी आदत ऐसी है कि अब जननायक की उपाधि की चोरी में जुटे हैं। बिहार के लोग जननायक कर्पूरी बाबू का ये अपमान कभी नहीं सहेंगे।
Amid politics over NDA and NGB CM face pick, Modi says NDA will win Bihar under Nitish leadership. Tejasvi hits out, says BJP won't make Nitish CM. Nitish has been hijacked. MGB starts to iron out friendly fight seats. Congress pulls out of 2 seats. VIP withdraws from 1. Joint Mahagathbandhan manifesto on October 28th. At least 20 dead in horrific bus tragedy in Andhra's Kurnool. Bengaluru-bound bus from Hyderabad catches fire after collision with a bike. Over a dozen hospitalized with burn injuries. One of India's most prolific ad geniuses passes away at the age of 70. PM Modi leads tributes for ad man Piyush Pandey, the genius behind the immortal Fevicol, Cadbury and Vodafone Pug ads. Even the iconic Ab Ki Baar Modi Sarkar tagline. And we're beginning with some breaking news that's coming in. The Council for Election Commission of India tells the Madras High Court that SIR exercise for electoral rolls in Tamil Nadu is likely to begin soon. The SIR in Tamil Nadu is expected to begin in a week or so. That is the statement that the Election Commission has given in the Madras High Court. As it further says, consultations with the chief electoral officers have been held. The ECI also told the court that all directions followed from the Supreme Court in the Bihar SIR case will also be followed during the SIR exercise in Tamil Nadu. Nalini Sharma is live with me on this story. Nalini, Madras High Court hearing a petition over SIR and verification of electoral rolls. What more do we know about the Election Commission's stance?
Well, Anisha, this petition was filed by a former member of the AIA-DMK, and essentially they were asking for the verification of electoral rolls in several constituencies in Tamil Nadu that, as we already know, is going to polls in 2026. So it was during the course of that hearing on that PIL before the Chief Justice's bench is where this statement was made by the Standing Council for the Election Commission of India, where they said that the SIR exercise in Tamil Nadu, which will essentially include the verification and the cleaning up of the electoral rolls in the state of Tamil Nadu, is expected to begin within another week or so. And this we're seeing after a similar SIR kind of an exercise has been planned in several other states. Another important statement that came in from the ECI Council was that all the directions that have already been issued by the Supreme Court of India during the hearing in the Bihar SIR case, all those directions will also be followed while carrying out the exercise in Tamil Nadu. And it remains to be seen how the future of this case happens, because the bench is still not disposed of the case. They've adjourned it until a later date, and it remains to be seen how soon the Election Commission can begin this entire verification of the electoral rolls in Tamil Nadu now.
All right, thank you for that, Nalini Sharma. A very, very crucial statement coming in from the Election Commission in the Madras High Court. The SIR exercise likely in Tamil Nadu over the next few weeks. It will probably begin in just about a few days. And very, very crucially, what the Election Commission has said is that all the orders passed by the Supreme Court regarding SIR in Bihar will also be followed for Tamil Nadu. So clearly, the question of what documents will be used, whether Aadhaar will be a valid proof of identity, and the kind of expectation, the kind of work that will be done by the BLOs, by the BLAs, the public consultations, the public notices, and the review of the draft rolls, all of that will have to be followed also in Tamil Nadu. That is at least is what the ECI has assured the court. But now let's go across to Sakshi Batra of Business Today with all the updates of the markets. Sakshi, over to you.
Good afternoon and welcome to the Market Closing Show, our collab show between Business Today and India Today Television. I'm Sakshi Batra and this is the 3 p.m. show where we get you all the market closing action. First up, let's take a look at what's hot in the corporate and the financial space. Market snaps 6 days of a run-up as Sensex now tumbles over 500 points and the Nifty also slips below 25,750 mark. Banking, FMCG stocks drag while metals shine. Oil experts say Russian oil supply to India could fall to near zero after US sanctions. Despite global price swings, Indian consumers remain protected as petrol and diesel prices have been frozen for almost 3 years, near 100 rupees per litre. Also, when we look at the Brent crude prices, they are trading near $66 a barrel right now. Reliance Retail enters India's 10-minute delivery race with JioMart using 3,000 stores as hubs and 600 dark stores. The platform has added 5.8 million customers within a quarter and orders up to 200% on a year-on-year spell, intensifying competition with Blinkit, Zepto and Swiggy Instamart. Finance Minister Nirmala Sitharaman says the festive season has created 50 lakh temporary jobs and announced a simplified GST registration process that will start from November 1st. Asia is set to drive 60% of global growth, says IMF. Forecast at 4.5% in 2025 and 4.1% in 2026. But higher tariffs and global uncertainty mean the region must cut trade barriers and boost integration. Let's straight away look at how the markets are trading in the last 25 minutes of trade. Well, it has turned out to be a volatile session, a very, very choppy session at large. And from the morning gains, we have actually lost quite a bit. Now, 0.3% lower for the Nifty, hovering under 25,800 odd mark at this point. The Nifty Bank has also slipped to the low point of the day, slightly recovering from that now. 0.6% lower, albeit 384 points of a loss that can be seen. Among other sectors that have actually dragged, remember it was the IT sector that was still holding up onto the gains for a large part of the day, but it's now also slipped into the red. Even the banks are down. Private banks, PSU banks, they're down in trade. Financial services, FMCG is down. Autos, pharma have all given up the gains. Even the broader markets, mid and small caps are lower in trade right now. Barring oil and gas and the real estate sector, rest all of the sectors have now come under some selling pressure. You can actually see somewhere about 10 to 15 odd Nifty stocks that are still holding up. Hindalco, ONGC, Bharti Airtel among the top 3 movers as far as the positive moves are concerned on the Nifty gainers front. ICICI Bank, Shriram Finance and Nestle remain the other movers on the positive end. But what has slipped in the trade? Well, you can actually see the stocks that are down. Cipla, HUL, Max Healthcare, UltraTech Cement, Kotak Mahindra Bank. These are the top laggards at this point. But let's welcome our guest on board. Avinash Gorakshakar joins in, market expert, to help us understand how to understand the mood of the markets right now. Warm welcome to you, Mr. Gorakshakar, and good to have you with us in the new Samvat year 2082. Well, we towards the end of the previous Samvat that largely played out as a consolidative year, we did see some spirits turning back into the green and the markets also turning into a festive season with a positive turn. Now, a day after the new Samvat has begun, we are seeing that the markets are getting under selling pressure yet again after having climbed up above that 26,000 mark yesterday. How are you looking at this volatile turn of the markets? What does it really, talk about the strength in the markets that still seems to be lacking?
Yeah, good afternoon, Sakshi. See, my sense is markets are witnessing a little bit of volatility because, I think the markets were excited a couple of days back that the trade deal could happen very near in the very near future. But
Sure.
I think, mostly this deal is yet in the pipeline. I think the markets got overexcited and the markets went up by almost 300 odd points. But again, profit booking came in. But overall, I think, one needs to understand that this deal is definitely going to happen in a favorable manner for India. It may take a little bit of time and we may see this deal happening maybe in the month of November.
Okay.
Overall, I think what is interesting and what is really positive for the markets is that the quarter two earnings season has started off on a very good note. Most of the quarter two numbers, the Nifty companies which have come out till now, clearly have indicated a good performance in terms of top line and profitability, and very few negative surprises. And most importantly, the GST cuts which have been announced by the government, the real benefit is going to be reflected in the third quarter. Although we have been hearing reports from automotive companies like Mahindra and Mahindra, which have clearly said that Navratri and typically, this Dashera Diwali, the sales of automotive numbers are going to grow quite significantly. So that is good news. In fact, most of the GST benefits, for beneficiaries within the FMCG and the consumer appliances and the consumption kind of sectors will get reflected in Q3 numbers. So I think, we are on the right track. Most importantly, interest cuts have been announced. The monsoon has been good. Rural demand is coming in. Even Lever announced its result, but it clearly gave a positive commentary on the volume growth for the next 6 months. And I think overall, one has to be a little bit of a stock picker in this market. Rather than buying the index, one has to look at interesting companies which have given good commentaries. And where I believe, the roadmap in the next 12 to 15 months looks pretty interesting. So I think, it's a good time for investors to actually cherry pick now and not get worried by the fall in the market, which is quite natural. These kind of profit booking activities do happen, but that doesn't mean that the India story is over.
Okay, so no need to worry or panic unnecessarily. This is part of the course, and we have to really look at how the markets are just looking at profit booking after a swift run up in the last few sessions and the weeks that we've seen in the markets as well. But we will have a lot of cherry picking to do in case you still want to look at any winning ideas that we will be discussing, of course, during the course of our conversation. Now, remember, there's also a big relief coming in for small businesses, viewers, starting November 1st. GST registration will actually become faster and simpler. It's the Union Finance Minister Nirmala Sitharaman who has announced approvals within just 3 working days for select taxpayers. Now let's listen into what she has to say.
From 1st November 2025, the simplified GST registration scheme will grant automatic registration within 3 working days in 2 cases. One, applicants whom the system identifies based on data analysis, and those who self-assess that their output tax liability will not exceed 2.5 lakh rupees per month. So for these 2 categories, simplified GST registration will happen, and that will give them registration completed within 3 working days. This single reform is expected to benefit 96% of new applicants.
Absolutely. So there you have it, the reforms progress that continues, especially on the taxation front. Remember, the year 2025 has actually turned out to be a landmark year for taxation reforms. We've had first the direct tax cuts by way of announcements in the union budget that we had on 1st of February. Thereafter, we've also seen changes in the GST regime as well. And now we do see that the income tax bill also has come in, and now you have a simplified registration for small businesses that is being announced. So the taxation reforms that continue too. Avinash, how are you looking at the broad taxation ease and the ease of business that the government is focused on at this point in time? Do you think along with the earnings recovery, these reforms will have a lot of trigger to provide to the market sentiments?
Yeah, I think this is definitely a good long-term measure. The government wants to intensify its tax base, and I think, this new kind of regulation which is coming from 1st of November actually makes it very simple for, taxpayers who want to get a GST registration. I think clearly this is a good move in the longer term. I think in any case, the GST collections and the GST mop-up of taxes has been going on very smoothly. And I think, typically for the next couple of months, maybe one could see a little dip in GST revenues because overall, rates have come down from the base level of 18%. But I think overall the base is going to increase as more and more, taxpayers come into the net, more services come in the net. I think the overall absolute figure will definitely increase over the next 3 to 4 months. And I think it's a good move because that actually stimulates demand. It actually stimulates a lot of customers to buy, and actually increase the consumption trend in the economy, which is a positive side. So net, I think the government has been doing all it can to incentivize buying and consumption in the economy. And I think the private sector is also going to obviously make full use of it in terms of offering the products at the most competitive prices.
Fair point. But breaking news coming in on your screens, viewers. MSME credit support plan is now nearing a final stage. FinMin has now planned relief for exporters that are hit by US tariffs. There's a credit guarantee scheme that's likely by next month, and exporters could actually get loan cover up to 100 crore rupees under the new scheme that's modeled on existing MCGs as well, MCGs as well. The framework that has been existent, the tariff hit sectors who have been seeking urgent government intervention like textiles, leather, shrimp industries, they had been raising concerns over the tariff hit that they had been facing, and now the government is mulling relaxing the norms under the export credit plan as well. For more on this, we are now joined by my colleague Karishma Sudani. Karishma, this could sound good news for the MSME sector, especially the export-oriented sector, who had been talking about that they would definitely seek some sort of a government support to really brave the kind of tariffs that have been imposed on India. How are you looking at what is possible? This could be finally a sigh of relief for these exporters.
Actually, much awaited. In fact, while we were all looking for some kind of exporter relief package coming in, I'm told that is also being worked out by PMO. But to look in the near future, we can expect that Finance Ministry could announce a credit guarantee scheme for MSME exporters, especially the ones who've been impacted highly by tariffs, who have availed loans of up to close to, up to 100 crore. It's similar to what was announced just before budget in the month of January 2025. In fact, the government is looking to further simplify it and help, and this is to meet the short-term temporary hindrances that have been caused by the 50% tariffs. I'm also being told that associations representing textiles, carpets, shrimp industry, they have keenly met the Finance Ministry officials, and they've shared that there is an urgent and dire need of having some kind of help from the government.
Absolutely. So we'll keep an eye out on that as and when the developments come into focus and the government finally announces this as well. But good to hear all of this. This definitely is good news that finally there is the anticipation on the help that these export-oriented sectors were seeking. Might finally see some help coming in by way of government helping them as well. Now remember, when it comes to the US tariffs and how the world order is turning more increasingly uncertain, remember, we also need to find out that the White House has also now defended its latest sanctions against 2 Russian oil companies, calling them tough and far-reaching as well. Press Secretary Caroline Leavitt of the US has made big claims that India and China have now already scaled back oil purchases from Russia at President Trump's request, and as Washington also ramps up global pressure. Let's actually listen into what she had to say.
If you read the sanctions and look at them, they're pretty hefty. And I saw some international news out of China this morning that they're scaling back oil purchases from Russia. We know India has done the same at the request of the president. The president has also pushed European countries, our allies, to please stop their purchases of Russian oil as well. So it's full court press for sure. And we expect that these sanctions are going to do harm, as the Secretary of Treasury said yesterday.
All right, let's actually go across to our guest, Avinash, to discuss and to decode for all of you what these developments really mean in case you are investors into these key sectors. One, let's try and understand what's happening on the oil front. Mr. Gorakshakar, one, there are increasing reports that we are getting to hear from refiners, from oil exporters, or from oil experts as well, that India and India's imports of Russian oil could now fall to zero or near zero because of these US and European Union sanctions. Now, the good part is that the crude oil prices were still, benign and, hovering around $65, which is not as, sharp or as high as about $100 or something when we had started to purchase Russian oil, for a discount and for the benefit that we could probably give out to the consumers at large. At this point in time, in case we do see Russian oil imports fall to near zero, what could be the impact on the oil refiners? What could be the impact on the kind of petrol pumps that we have? If you could explain that, and will there be any impact on the consumers at large, since consumers have largely remained protected for the last 3 years because petrol and diesel prices have remained frozen. So what do these new sanctions and our imports of Russian oil falling to near zero would mean? And second of all, how are you looking at these export-oriented sectors as well, which are now looking at some sort of a government help?
So I think clearly, I think Sakshi, the oil price, structure is going to be little volatile now. I think if Russia is completely put out of the oil market, it would create a little bit of supply crunch in the near term. And I think we have already seen crude prices, move up by about 3-4%. I think the first impact would be that, if oil prices rise and the supply crunch continues, because, now after this development, if Middle East also decides to, curtail supply, then I think crude prices could start moving up again. Although prices are benign now, but I think we need to take into account how the Middle East, actually operates on this kind of development. But I think clearly the oil marketing companies are going to be hit, in fact, because for them, the main raw material is crude oil. And I think a lot of industries like chemicals, carbon black, lubricants, these could be sectors where the raw material cost could increase. A little bit of inflation could also get increased. But on the other hand, upstream companies like ONGC, Reliance, or that reason, Oil India, Salan Exploration, these are all companies which benefit from rising crude prices. So I think net, for the customer now, it's still too early days to say whether petrol and diesel prices will go up. But I think clearly for the last few, quarters and months, the oil prices were comfortable, so there was no pressure on the customer.
Correct.
But if at all crude goes up, then I think it could actually upset the cart, in the near term.
Okay. And what about the export-oriented sectors, Mr. Gorakshakar? How are you looking at the textile space at large, MSME sectors, which had been long awaiting any kind of a help coming in, and there could finally be, like sources to Business Today Television have said, that there could be some sort of a credit guarantee scheme that they could be looking forward to. We are looking at all of these stocks now further inching up higher. Gokuldas Exports, Vardhaman Textiles, they've all inched up higher to the day's high yet again as we have been breaking this news on India Today.
So I think clearly, I think the government is making all-round efforts to protect the export-oriented sectors like textiles, auto components. And I think this definitely is a good sign because the government wants to protect these exporters who have been faced with the import tariff of 50% currently. There are expectations that this tariff could come down to 15%, but Mr. Piyush Goyal has clearly indicated that India is not in a hurry. We'll be looking at all the contours of the trade deal very carefully, and only what is good for India will be accepted. So I think, it's going to be some time before we see the final sign-off from Mr. Donald Trump. But I think, yes, textile exporters definitely should benefit. Cotton prices have been stable, and most importantly, the quality and the demand for textiles is definitely strong. So I think to that extent, one could look at these companies from a longer term perspective. In the short term, maybe the September or maybe the December quarter may not be all that great. But I think longer term, yes, textiles is definitely in a sweet spot. And I think one should look at it from a long term perspective.
Okay, got that. Before we move on to some of the other sectors and discuss on them, let's focus back our attention to the precious metals, gold and silver, that have outshined all asset classes the Samvat year 2081 that's just gone by, in Diwali. And now gold and silver prices are actually seeing some volatility at record high levels. Post the festive fervor, the shine seems to be fading a tad bit. Prices have slipped from their peaks as well, and the rally seems to be cooling off. Earlier, I spoke to Mr. Navneet Damani, who is the Senior Group Vice President and Head of Research at Motilal Oswal, to find out the reason behind the fall in gold and silver prices, to find out whether it's only profit-taking or are there deeper factors at play. Also to find out what is the outlook going forward. Will gold and silver prices crash more from the current levels? Will there be an opportunity for all those investors who've been waiting for an entry point in gold and silver to do that? And of course, where are the prices headed by the end of this Samvat year? Let's listen into that conversation.
Actually, gold and silver came into limelight largely because of the percentage returns they had given and the short span of time which the percentage returns were delivered. And today we are discussing exactly the same thing, that this kind of fall or the ferocity of the fall is also something which is concerning to people who bought in off late. So I would like to reiterate that there is no major macro change in fundamentals. There is only some profit taking because gold typically was moving like a mid cap stock, silver was moving like a small cap stock, and typically there are bouts of profit taking which happens in this kind of a scenario, and which is what we are going through. The backdrop remains same. Silver and gold supply side story remains troubled. Demand side story remains very positive, and central banks are buying gold left, right, center. Only thing is that what we've seen till $4,000 was typically what people had digested. Anything below above 4,000 to 4,400 was kind of an exuberance or froth getting built up, a FOMO kind of effect which we discussed just before the Diwali episode also, and this is what has now been gone off the table. Some profit taking has been taken off the table, and eventually once this quarter number comes out with what kind of buying has happened from the central banks over the July to August September quarter, then we will have greater clarity that what is the pace of central bank. Are they still comfortable buying at gold at higher prices, or even are they taking a breather? But overall, not much has changed. It is only a fear psychosis and some profit taking which is happening in these kind of times. But silver will be anywhere in the range of maybe around 2 lakh plus kind of a level, 2 lakh 10,000 typically, or maybe $65 on the international is where we see silver prices. Gold at best could move once again towards a lifetime high of $4,400, $4,500. On the domestic front, it will be in the range of 1 lakh 35, 1 lakh 32, 1 lakh 35,000. We are not overtly bullish on gold. We are bullish, but not overtly bullish. Money should be made where it matters is silver, investment into silver or investment into other alternate metals like copper, zinc and aluminum.
Okay, so about 5 to 6% of a correction more on gold and silver from the current levels, but sooner or later the prices could start to move up again, and by the end of this Samvat we could see again 2,10,000 rupee kind of levels for silver per kilogram and around 1,35,000 rupee per 10 grams for gold as well. Coming back to Avinash ji for a conversation on the precious metals as well, and to help our viewers understand how do you look at the asset classes equity versus these precious metals that have far outpaced equities in the previous Samvat. Do you see a change happening in the new Samvat year between equities and gold and silver?
No, I think, gold and silver are two asset classes which move according to the geopolitical developments. And I think clearly, both the metals, gold and silver, had risen very fast in a very short period of time. So some amount of profit booking was quite understandable. My sense is that gold as an asset class will always rise steadily, considering the fact that central banks continue to buy. There are a lot of other reasons, social reasons why gold prices go up. Silver is also an industrial product, apart from being used on the residential domestic side. Clearly, I don't think prices are going to crash in the very near term. Whatever we are seeing is normal profit booking. And I think both the metals, gold and silver, because of supply crunches and supply constraints, are going to be very steady in terms of their price movement in the next, 6 to 12 months. So I think somebody who wants to take a bet on silver or possibly gold could bet maybe on the gold finance companies or maybe, the gold jewelry companies, because this is a steady business and a safe business. And somebody who wants to play purely on the asset class can look at buying some sort of ETFs here, which can give a reasonable amount of risk reward over the longer term.
Sure. Let's actually also look at how the recent few days and the run-up to the festive season has actually panned out, not just for gold and silver, for consumption as a theme as a whole. Prime Minister Narendra Modi, in fact, has addressed the Rozgar Mela today via video conferencing. He highlighted the record-breaking sales seen during Dhanteras and Diwali, saying new records were set and old ones were broken, a sign that he has said that the GST reforms have given fresh momentum to India's economy. Let's listen in to what he had to say.
अभी हमने देखा धनतेरस दीपावली पर जिस तरह रिकॉर्ड बिक्री हुई है, नए नए रिकॉर्ड बने, पुराने रिकॉर्ड टूटे। ये दिखाता है कि कैसे जीएसटी में हुए रिफॉर्म ने देश की अर्थव्यवस्था को नई गति दी है। एमएसएमई सेक्टर और रिटेल ट्रेड में भी हमें इस रिफॉर्म का सकारात्मक असर देखने को मिल रहा है।
All right, records have been set during this festive season, but time to wrap up the markets for you. A minute to go before we shut shop for the day. 0.4% of a decline for the Nifty, as you do see. We've ended near the low point of the day and given up some of those morning gains. So profit taking today clearly after yesterday's move above 26,000 odd levels. The signs were visible even yesterday towards the latter half, and we have seen, although some pickup from the end point of the day, but the Nifty Bank has also slipped by about 0.5% in trade. The broader markets also, both small and mid caps, lower in trade. They will be coming up on your screens right after. And of course, you're seeing the IT sector as well that has slipped in trade. Remember yesterday's hero, now giving back some of their gains as well. Look at the mid caps, 0.2% lower in trade. The small caps also down in trade by almost 0.2%. Although there has been some pickup towards the end point of the day, but we do end all the major indices, the Nifty Bank, mid and small caps, all of them down in trade, even the IT sector. These are the top gainers on your screens. It was the metals and the commodity space that was shining bright. Hindalco up by about 4%. ICICI Bank and Bharti Airtel among those gainers. Shriram Finance. You also had names like BEL and ONGC also pulling up almost 1% in trade, but just about 10-15 stocks on the Nifty that hovered higher. But on the declining side, Cipla down in trade, 3.5% lower. Remember, we had marked out the stock right in the morning as well on Business Today for you viewers. HUL, UltraTech Cement, HUL post earnings that is seeing some weakness now. Kotak Mahindra Bank ahead of its numbers. Adani Ports and Apollo Hospitals also among those top drags that we see in the markets, but 25,795. So we have slipped below 25,800 and we are below about 300 odd points from the recent high that we touched yesterday. Let's actually go back to Avinash to understand some of the queries that have actually come in from our viewers then. We have the question that's come in from Karan Jadhav from Mumbai who wants to know about the recent cool off in gold and silver, something that we were discussing with you, Avinash. He's looking to invest right now and wants to know what exactly should he be doing. Should he be purchasing this dip right now?
Yeah, I think, if the investor has a slightly longer term kind of time frame, I think he should not hurry in buying, and in one go. I think he could look at a small SIP in some ETF fund where possibly he could invest his money. And if he's an equity investor, then I think he could possibly take a call on some of the gold finance companies like Manappuram Finance, Muthoot Finance, which have been beaten down very badly. These are pure plays on the gold finance, segments. Obviously, gold prices, when they come off, these companies do get impacted, but this is just a short-term aberration. The longer-term structural story for gold finance remains to be quite positive. So I think, if he's a conservative investor, he could look at ETFs. Otherwise, he could probably do an SIP in either of the gold finance companies.
Got it. Sarthak Sharma comes up with the next question. He's from Delhi and wants to know from you, Avinash ji, will the current rally in the defense sector continue? Remember, the DAC has given approval for 79,000 odd crore rupees of procurement approval for the Indian Armed Forces, Navy, Army, as well as the Air Force. And therefore, we've been seeing the defense stocks rally and buzz in throughout the course of the session today, even though defense index has also seen some profit booking by the end of the session today. But what's your sense, Avinash ji?
No, I think defense is going to be a multi-year story. Although, now defense companies have significantly risen in terms of prices. I think you cannot expect multi-bagger gains here, but compounders, I think, definitely can come. And I think the best part is that, this order is not going to be the last order. We are going to see many more orders like this coming from the government. And typically, almost all the large defense players, have got 2 to 3 years order book visibility. So I think clearly, companies like Bharat Electronics, Bharat Dynamics, HAL, or for that reason, Cochin Shipyard, Garden Reach, these are companies which I think one can look at accumulating in an SIP mode. And I think keep a time frame of at least the next 2 years, because these kind of companies are unlikely to give you quarter on quarter kind of upside. They are clearly, well positioned for wealth creation, but you need to keep the time frame slightly longer.
Okay, all right. Thank you so much, Avinash ji, then for being with us on the program. Always a pleasure to host you. And with that, viewers, we wrap up our special edition. These are the numbers at which you can actually send us your queries in case you too have any questions about your investments in mutual funds, in your SIPs, whether you've invested in gold and silver as well. The numbers are flashing on your screen. So send us your questions and we will have top market experts guide you through all the questions that you have. And also, don't forget to catch the market opening action with Abha Bakaya on Monday morning at 9 a.m. now.